Historically, in your stock portfolios, have you owned oil companies? If you have, then you've traded in energy stocks. Over the last several years, though, that definition has broadened to include other companies that are involved in the energy business, but not in the petroleum end. For instance, there are geothermal companies that are traded publicly that rely upon steam and hot water coming from the earth to spin turbines to create clean power. There are companies that just use water to create power and energy. One thing they all have in common is they can trade rights to whatever power or energy that they have between different businesses. Meaning, if I'm your local power company, they're in fact probably buying power from many other power companies around the country. Why does that matter? Because rates change, and they're just trying to reduce the cost of the product that they're marking up and selling to you. Last but not least, the most spectacular part of the energy business today is in trading carbon rights. All that means is some companies and individuals have less waste than others. And if you have less waste, you get a credit. And if you have a credit, you can sell it. Why does that matter? Because companies are being penalized if they are severely negative in terms of their waste output. So they are actively looking to buy carbon credits in order to offset that waste that they have. It's cheaper to buy them than it is to pay the penalty. So that's a little bit about energy trading. Which one's best for you? Well, those are some of the most sophisticated markets in the world. So I would think very carefully about being involved with any of them. I'm Roger Groh at Groh Asset Management, and I thank you very much for spending time with me.